What up, Hyperchange? Welcome to another episode, mixing it up a little bit today, and we're talking about a microcap company, which I think is an excellent case study. Microcap company, for those who don't know, is a tiny company, only worth a couple $100 million, but has a stock that you can buy and trade. I don't know. I used to love investing in microcaps, these smaller companies, so exciting, so under the radar. Warren Buffett, Peter Lynch, all the greats, or a lot of the greats, got their start in microcaps because you don't have large institutional investors and smart money competing with you. So there's opportunity, at least in theory, for significant market mispricing. So that's why I love the microcap space. And just a couple weeks ago, I was in Los Angeles at the LD Micro Conference. Shout out to Chris Lahiji and David Scher. Thank you so much for inviting me and having me. But it's this really cool conference where there's like 100, 200 microcap companies present, and you get to meet with the management teams if you can request meetings. And it's just it's just like the Woodstock of small stocks, basically. And it's so fun. And I've been going for about 6 years. And so I met XPEL's management team there. I've known XPEL's management team for probably 3 years now, or just seeing them at different conferences. I think I jumped the gun a little, but this company called XPEL Technologies. So they're a little startup that I've been following for a long time now, that goes to these microcap conferences. Their stock, as I'm making this episode, is at about $5.41 a share. I have made episodes about XPEL in the past. The stock has actually gone up pretty significantly since I made those original episodes. So you can go watch those if you want more background on the company. I sort of wanted to just give you an overview of the company, and I thought it could be really fun to just basically have me walk through and narrate their investor presentation and explain it to you like that. So this is the investor presentation that I just saw a couple weeks ago at the conference. And it gives a great overview of the company. I'll put a link in the description so you can check this out yourself. But so XPEL is, a protective film company, the leader in protective films. Their main product is automotive paint protection film, PPF. And the reason quick sidetrack story, the way I found out about XPEL is because I was browsing the Tesla forums and noticed that people were talking about this XPEL product. And then I'm also a member of this thing called the Microcap Club, where people share stock ideas about tiny companies. And someone had pitched XPEL, and then I was like, wait, is that what I keep seeing pop up on the Tesla forum? And so I was like, wow, so if Tesla owners are buying this product, it must be okay. And so that's how I got introduced to XPEL. So XPEL is basically their core business, like an automotive accessory business. Paint protection film. They recently launched the window tint. Then they're moving into a bunch of really interesting stuff, like architecture window films and some health stuff, but more on that later. So this is a brief overview of the company. They're headquartered in San Antonio, Texas, founded about 20 years ago, 200 plus employees. They own 9 company installers. They're operating in 5 countries. And the big thing is their SEC registration process. It says that NASDAQ listing applied for. So this is another little sidetrack why I think it's so exciting for XPEL right now. This is a tiny company that I've been watching grow up and evolve, and they're finally for years and years and years have been talking about cleaning up their listing and operating structure and just uplisting to the NASDAQ or a major stock exchange, which has been a huge reason the stock is under the radar. Nobody wants to invest it or touch it or can't, because they're headquartered in San Antonio, but they're listed on the Toronto Stock Exchange, but you can buy them on a different ticker, XPLT, on the US OTC gray sheet markets. Anyway, it's a nightmare, but they're changing all of that and listing up to the NASDAQ imminently and changing the ticker to XPEL. And so I think this is going to be a huge change that structurally is going to drive the stock way higher, get much bigger institutions involved. This is one of the reasons why I'm so bullish on this company, because I think that's a huge catalyst that just structurally is going to bring a lot more eyes and liquidity to the name. But anyway, this is their history of innovation. Consistently, acquiring distributors to basically vertically integrate, launching new products. 2018, they launched the Vision architectural film. They launched the Prime window film 2016. So they're constantly innovating. I've been really, really impressed with the organic product roadmap this company has and the way they just really know their niche and sort of have been expanding into different adjacent verticals. So this is how they view their competitive differentiators: a self-healing, stain-resistant, film technology, very easy to install. They have the DAP software. Per my understanding, this is a big advantage the company has, this software database with all the exact shapes of 80,000 different cars, patterns apparently for 80,000 different cars, so that they can sell their software with the film to these installers. It's a rolled film of this coating that you put on your car, right? That's the PPF product. And so they'll also sell the software so you know exactly how to cut that film to put it on the car. Makes it much easier to install, makes it much higher quality install for the customer. And so there's a software component that makes the business business stickier. And I think that that's one of the things they really, really excel in. They also have a really good brand, and they do a lot of like dealership training, and they have, installation, software, training support, 24/7 availability, customer service by their global team. Although I do want to note that on my last video about XPEL, I asked you what you thought about the product, and a couple people said there was like a little yellowing that happens with the XPEL, so it can change the color of your paint. Not like it won't damage the paint, but it'll just give it a little yellow tinge, but it is thick and it is good. So some people said it wasn't the best paint protection film. 3M was a little bit better. Other people said it was the best one, but leave me that in the comments below. Like, is XPEL's paint protection film a good product? Like I know some Tesla owners love it, but I'm curious what you think. Have you used it? Do you own it? I mean, I don't own a car, so I'm a little out of my depth there. Back to the product here. So this is really what it is, and this will give you a great sense of it. This is a Lambo, I guess. They have all these little examples: door edge guards, door cup guards, door still guards, etc. And then this is the actual film, which my understanding is it's pretty commoditized. Like, they actually outsource and buy this film. So that would be one of my sort of concerns, and I guess Achilles heel of the company is like they don't really make their core product. Like, unlike Tesla, who's vertically integrated, makes their own stuff. On the flip side, the paint protection film seems like a commodity film, so maybe it is good that they outsource that commodity piece of the business. But this is their Ultimate Plus paint protection film. I guess their more premium one, very thick. The essential theory here is protects the paint of your car, protects the value of your car, that investment. And I think as we transition to fleet sales and fleet operators of cars, Lyft, Ubers of the world, and they're buying cars in fleets or rental car companies, I think they're going to want paint protection film because they're going to want to preserve the quality of their car. They're going to be, thinking about the resale value, thinking about a lot of people using it. So I think paint protection film penetration, the amount of cars, out of the cars sold, the percentage that gets paint protection film, I think actually could increase with these more, ride sharing fleet operators. Anyway, I'm getting sidetracked again, but anyway, this is good to illustrate the different economics of PPF. You can get, very, tiny pieces coated, just the front or the entire car. And then the pricing obviously can vary from a couple $100, just a tiny part of your car, to thousands of dollars per car if you get the whole thing wrapped. They're also moving into ceramic coating, which is a different product. I guess this is a hydrophobic coating that complements the paint protection film, accretive to gross margin. So once again, launching adjacent product lines in their sweet spot. Another example of that, the window film Prime, which I think is a huge potential for them. They've sort of been growing slowly, but they've kind of been building this in the background. I think a lot of potential to get into window film, tinting your windows, doing all sorts of fancy stuff like that. Then their other really exciting stuff, they're moving into a totally new growth avenue, is they want to build on the XPEL brand, this brand of protecting and being a protective layer of film. And so, you think about that, moves beyond your car, protecting your home, protecting your windows from theft, from shattering, things like that. So I thought I don't know how well this will work, and I have no idea about this market, but I think it's interesting, and I like the brand philosophy of XPEL wanting to protect, being that protection brand and expanding into different, use cases of that, which I thought was really creative. This is more on their software thing that I was talking about that allows you to cut and do things specifically. So, there is a little software tech component to this company, which I love. Here they show how the revenue actually breaks down. And the one thing I wanted to highlight here is that they are growing significantly with new car dealerships. Like, they'll partner with a car dealership as a way for the car dealership to make more money. They can sell the paint protection film to those buyers of the cars. But I'm kind of worried about that because I think the entire dealership auto car model is going to crumble because Tesla's going direct to customers. I think that's the future. I think these dealer networks looking for other ways to make money than selling the car is not sustainable, and that's what XPEL is selling them on. So I don't know if I like that part of the distribution model. That's only a tiny piece of the business, but it's growing piece of the business, and I think the way they distribute their products is really interesting. It's a combination of to dealerships, but they're also trying to buy more of the actual installation places themselves, vertically integrate, own it, have like an XPEL branded store where you can just go. So I think that has a lot of potential. Here are a couple strategic initiatives. They're growing rapidly. I mean, this is a company, you're going to see the financials in a sec, that has grown consistently. They're establishing a European headquarters, stepping up their advertising, expanding into the non-automotive side, which I think is going to be really exciting. This is the part of the business that blows me away. And this is the part that gets me excited. The product's great. It looks like people like it, but it's automotive window film, not that exciting. What excites me is how well run of a business it is, how incredible the track record of growth has been. I mean, look at this. They've compounded revenue at 40% almost since 2014. They were even smaller before this. I mean, the growth rates here are incredible. I was actually originally predicting like $100 million in revenue in 2018, which I had to way revise up. And I even lowballed it. They did $110 million. So incredible revenue growth in 2018 there, and just a history of compounding revenue revenue growth. And one thing they're not showing there that I wanted to highlight is this has come with like zero dilution. I think they've done one capital raise since I've been following the company, but the share count has been flat at 26 or 27 million for years. Like, management owns a ton of stock. They're not diluting. They're funding this growth with internally generated cash flow. I mean, to see a business growing this rapidly is one thing. To see a business growing this rapidly that's funding itself internally is another thing. And that's what XPEL is. So that's very impressive. Here we're moving into the gross margin trend. So the gross margin improving just like revenue. Last year was a real breakout year. Not only did they grow revenue, but the gross margin bounced back. They hope for this gross margin improvement to continue to hit, around 33%, or that's what it was in the first quarter of 2019. So really strong underlying economics here. The business, EBITDA or earnings, as you can see, the positive. The company's been profitable for a long time. Breakout year once again in 2018. So the company's earnings are growing along with that revenue. This is what I think is interesting, is the balance sheet comparison from 2017, 2018, 2019. As you can see, the total debt has gone down. They basically paid off all of their debt, significantly improved their cash position, their working capital position. Their cash flow profile from operation has never been stronger. I mean, just taking a step back to sum this up, you have a company that is producing cash from its core business, just paid off basically all of its debt, has cash on its balance sheet, has been funding itself to grow like crazy from internal money. I mean, this is all the signs you want to see in just showing that this is a really, really well-run company. XPEL trading at $5.41 per share as I make this episode, with about 27 million shares outstanding. We look at a $146 million market cap. I mean, this company that did 110 million in sales last year, so it's like 1.2 times price sales, and then 11.8 million in EBIT last year. So 146 divided by 11.8, we're looking at 12 times 2018 trailing EBIT, only 12 times for a company that grew 63% this year. Or last year. So you have a company that's compounding at 40% for the past 5 years, rapidly growing, only trading at 12 times earnings, rock solid balance sheet, opportunities for growth, about to do this huge uplisting to massively improve liquidity and visibility of the stock. And I think part of the reason the stock is underperformed, it was at like $7 about a couple months ago, is that, their growth has been flatlining a little bit. And I think that's super, it's a really big misconception, because what's really happening is you have this super lumpy growth. They were doing like 12 million in revenue every quarter, bumped up to 25 million, and now it's kind of stayed at 25 million for 5 quarters. So the year-over-year number on Q1 looked weak, but now it's going to resume growth again. I mean, all you have to do is look at the annual chart to know, like, it's lumpy. On a quarterly basis, the revenue growth can be lumpy, but over the long term, it goes up. And this is one of my favorite things to capture inefficiencies in the market, is when the stock market, that herd 90-day mentality. You've seen this with Tesla. They freak out when there's one bad quarter, always overreact when there's a bad quarter, overreact on the upside when there's a good quarter. And so I think you have this combination of really bad, overreaction to little growth in Q1, which has depressed the stock. You have, the uplisting that's about to occur. I mean, there's so many, it's just like the perfect storm of events here. The valuation is so low. You have a management team who owns a ton of stock in the company. I mean, that's the thing I kind of wanted to end on is, so the CEO of XPEL, a guy called Ryan Pape, he is just, I don't know. I've met him a couple times, and I'm a huge fan. Just such a straight shooter, knows every piece of the business, really conservative, under promises, knows what he's doing, has a plan, executes, comes through on his promises. I mean, it sounds like that should be the case for everything, but this is really rare in the public markets, especially in the microcap space, to find a company that never dilutes. Management owns a huge chunk of stock. They're really sharp. They come through on their promises. You have the strong financial position. You have the cheap valuation. I mean, there's so much to get excited about for this company. I don't own any stock in it, so keep that in mind. I've been buying Tesla and Bitcoin with all my free money. So but if there was a company I would buy that was a microcap and I had to buy one, it would totally be XPEL. I mean, the flip side is I don't get pumped about the vision or the mission of like selling paint protection film. Like, that doesn't really excite me. It's not really, my whole theory of invest in the future you believe in, this inspiring vision of the world. I mean, XPEL just doesn't really there isn't that exciting tech disruption vision part of the company. So it doesn't really, or sustainability component. That's not a big piece of the story here, but just from a case study, a business story, a microcap company, just a unique business case study to follow. I think this is so interesting. And so that's why I wanted to bring it up to you guys. Maybe we'll call this show Wiffle Ball, where I talk about tiny companies, microcaps. Somebody mentioned that earlier, which I think is a hilarious name. So anyway, this is Hyperchange Wiffle Ball, talking about a tiny company, XPEL. Once again, this is not financial advice. Companies like this they can move 10% a day. They can go down 30% a day. XPEL, when I owned it a long time ago, got sued by 3M out of the blue. The stock went down 70%, like overnight. I got totally screwed. And then it took years to recover, even though it was a bullshit lawsuit. So this can happen when you're in this space. But the flip side of this space is, how do you find a company that grew 64% last year, trading at 12 times trailing earnings with a fucking rock star management team? You're not going to find that anywhere else besides the microcap space. So anyway, this is Hyperchange. Hope you enjoyed the episode. Huge shout out to our Patreon supporters, producers, fun in the channel. Thank you so much. I'll see you guys next time. Peace.